What's going on, guys? Welcome on into tonight's stream. It is Wednesday, April 12th at 7 p.m., 6 o'clock my time central, but 7 p.m. Eastern. I think we're going to try to make these kind of like a standing thing midweek. That is the plan. But I wanted to do this because I think it would be good to get some other people's opinions and other thoughts and stuff who maybe can't hop in the mornings or the power hour streams that we do on the CPI and what the heck's going on. So that is the plan for today. It is super bright in here because hopefully it's all good. I dim the shades. I guess I can bring them down more, but the sun sets and it just comes right into the windows, which I love, but it definitely makes for like a weird kind of lighting dynamic that I usually don't stream/film around this time anyway. But hope you're doing well on this fine Wednesday evening. And let's kind of just unpack what happened. So CPI comes out this morning, and it comes out year over year at 5.0. And the expectation consensus was 5.1 here. On Trading Economics, it was 5.2, but okay, similar. Core CPI comes in at 5.6. That was right in line with expectations. Actually, a little bit of a bump higher compared to last month on core, but that was expected. So I guess kind of in line with expectations there. We had some Fed speakers talking today, and then we had the FOMC meeting minutes from, from last meeting about 2 weeks ago or so. And so that dropped at 2 p.m. And then ever since that meeting, it was like, boom, that's when the wheels came off the bus. So that's kind of the deal. We'll look inside the CPI in a second. But yeah, you can kind of see, right? We had this spike in pre-market. I'm looking at SPY right now. I'm going to zoom it in so we can see it a little bit better. We had this spike here in pre-market when we were on the stream this morning. Market opens, SPY dumps, bounces, dumps down below yesterday's lows, then rallies all the way back up. And at this point in time, we've crossed VWAP like 3 or 4 times here. I'm like, okay, this is like, what is this fucking shit? I guess we're going to have to wait till the end of the week until we get all this stuff, PPI, unemployment, or jobless claims, like all that stuff out the way. And then come 2 p.m., actually, the thing is at 2 p.m. Eastern time, let me go zoom in on this chart. I'm pretty sure we had about 15, 20 minutes of a reaction here. And then, yeah, so check this out. So we had this right here. This is that FOMC minutes coming out. We had some choppiness and then a push up. Essentially, if we draw a level in, could not break the highs of the afternoon. So let's see, we get my tool back open here. Yeah, we couldn't break this double top high that we had pretty much at midday or around 1 o'clock Eastern time, 1 to 1:30. Tried to test that there just after the FOMC minutes, and then big move down. And that was the story into the end of the day because we pretty much sold off the rest of the day and closed down towards low of the day. And now in futures and after hours, we're down another like 0.2% or something for now. That's what we got. And then PPI data comes out tomorrow, producer price index. So that's kind of like a summary of what happened. Are we at the lows of the week? Nope. Still got another couple dollars on SPY to go. Are we at the lows of last week? Nope. Still got a couple dollars to go. So we'll see if we cross those levels tomorrow. That would be the spot to watch. And where is that going to be? That's going to be right here around 405.70 or so on SPY. So that's the deal. We broke these highs from this past couple weeks briefly and then rejected off of that this morning. But hope you guys are doing well, and happy to do a little stream here in the late afternoon or early evening, depending upon what time it is for you. Kyle did some exercising today. Triple top on SPY, fantastic. No, it worked. I mean, the thing is, if you look at that 5 minute, right? It makes a lot of sense, right? Like we tested that level, couldn't break it, right? You had the double top. Okay, fair enough. Came back up. Once we couldn't break that, if you were a rejection or support bounce trader or like a bounce trader, this is a good rejection to play off of, right? Pretty nice. And risk was minimal, right? You could have easily managed risk there. And that would have been it. So that's the deal. Play with my dog for a little while. I got some sick drone shots. I've had a drone for like a year or two now, but probably 2 years now. The DJI mini 2. So it's like under certain heights regulations or whatever, so I don't have to like register it or whatever. But I got some cool shots today. I got some train shots, got some shots of like the road into downtown here, and I got some shots of just like, random stuff. So I'm like, man, this is pretty cool. Like, I can't believe I haven't used it. I've been experimenting with other stuff too. So it's kind of a fun day, I think. Or fun, I guess. I just did that this afternoon, so kind of cool. Get mine to show teeth. Okay, so let's dive into the actual CPI stuff, details, goods. So inside of this report, there you go. So that pretty much tells you like what happened, but I was looking deeper into this. So here's the chart that we were talking about this morning. This is a pretty big move down. We had a literal move of like 1% to the downside in CPI. Also, a lot of the Fed speakers today, they said the line. Let me see if I can pull it up for sure. Let's see. So yeah, the Fed officials today, they lowered their views on the peak for the federal funds rate. Okay, after the bank stuff, that's coming out of the FOMC, the meeting minutes. And now the Fed believes, this is their wording, right, that they believe a mild recession will start will start later in 2023. That's their literal wording. So the question now, I'm seeing people already joking around, is mild recession the new transitory? And are they about to get like, mild recession to substantial recession to crippling recession to like all these different, like, you can see us go down the road. I don't know. We'll see. But is mild recession now the equivalent of inflation's transitory? Because now it's what the Fed's now saying. Everyone's, is making those thoughts. Some are saying that they don't actually see the recession. So it's, going up and down on that. And that's, where a lot of people have this, not wild, but a lot of people have this bias or this like really pretty intense opinion on what they think is going to happen. That's fine. But it's very easy to let those opinions, cloud your judgment and make you do things that maybe end up not being the best, for your money, right? We've done it. I've done it. We have all done it, right? So that's the thing. Inside of this CPI, some of the bigger negatives here were energy. If you look inside of energy, that's where we saw a lot of negatives, and not surprising. I mean, go back a year, and where was oil? Where was gas? Literally a year ago. If I go to AAA and see if I can pull up gas prices, I think it tells you about a year ago. So the current average right now, my thing just glitched. Current average is $3.62 a gallon. Okay, a year ago it was $4.09, almost $4.10 for gas. So you see where gas is down from there. So like, take this with a grain of salt, but that is what's down. Now, of course, that changes today a little bit, or that has started to change this month with oil kind of inching up and gas inching up, right? So these numbers were lower. Go back about a month ago, we were averaging, sub $3.50 a gallon. Now we're at over $3.60. So it's coming back up. Don't get me wrong. But those were a big part of the negatives. And then you look around and people are like, oh, well, those are going to go positive again. And these are all going to be, huge positive upside, concerns when it comes to CPI. I think that had to do, that was a big part of it. When we look at the depths of it, what's somewhat concerning is core CPI. Like core CPI actually bumped up 0.1% when we compare February to March data, which is not the best, right? Not the best news. So understand that also core CPI is all items less food and energy, okay? So take out food and energy, what's the CPI? And it actually, what core CPI actually ticked up a little bit. So we got the crossover where the headline CPI, all items is now lower than core. Okay. Used cars again down. So the used car market has definitely it's taking its small hits every month after month after month. It seems like that's down another 0.9% this month. New vehicles continue to be more expensive, slightly plus 0.4%. New vehicles 12 months is up 6.1. Used cars and trucks over the past 12 months is down 11.2%. Pretty cool. I mean, to see that. Transportation services is up 1.4 this month. Shelter, check this out. Shelter last reading, we got a 0.8. Now we got a 0.6. So that number is coming down little by little. That will be a pretty big one to watch into this year. So that's kind of like a general, the general gist here is energy was down a lot and used cars were down, but everything else pretty much was actually, we saw increases. Actually, food away from home was a negative category. Food at home was flat, and then all items, 0.1. Yeah. Okay. So that's the deal. On the CPI, like into like some of the depths of like what actually came out of the CPI. But yep. Love moves like that on SPY. I want to mainly focus on setups that can move SPY at least 50 to 1%, 0.5 to 1%. That's the time. And what did we get? What was that move? What was that type of move there? It was a pretty big move, right? So from there to the close, you got from there to lows, you got about 1%. So that was nice. I ended up having 2 trades today. It was actually really good. I had a really good day. I snuck out. The options were not great. I still was net green by like $50, but like, okay, whatever. On that, where it was I had the better day on futures. So here's futures. Here's what I traded. I traded this. This is the level I had, essentially a bear flag to the downside on the S&P. And I took this, and essentially, I don't think I didn't bottom ticket by any means, but we got in at like 41.36, and it went down to 41.20. I took about 8 to 10 points of that move. So I think I got out in the upper 41.20s was where I was getting out. So it went a little further. I could have got 10 points, but I could have got like 15 points technically. But that was it. Then it came back, and so okay, good that I got out, and moved on and just took the gains, and that's it on that. Then I played oil. Check this out. I played crude oil, which is kind of interesting, but same idea. I think I posted this in the Discord too. This is the setup. I was looking at like the 30-minute chart, I believe is what I was looking at initially. And I'm like, oh shit, look at oil, right? All of these highs not breaking above $83 or so. So then I go back to the daily chart in oil. I'm like, okay, let's see. What's the framework here on oil? Well, we just broke out a consolidation here as of late. It's up towards the highs that we've got. This could be a nice trade to the upside. So that's what I decided to do. And I took it on the break here. And essentially, we had to move from like 83 all the way to 83. I sold at 83.40 something. So somewhere up into this move. Got the same pattern again on a smaller time frame, higher lows, up into resistance. Eventually that broke. And then I sold into this pop right here. Actually, I believe I sold on this candle once we saw a weakness. And so I got a nice push, and then I started to break back down and broke underneath the prior candle. I was like, okay, I'm going to get out. And that was it. So those are 2 that worked out nice. The thing in the futures account, though, that I haven't really done is size into these things. I'm just trading it to the point where I feel kind of comfortable, contract or 2 on the micros. But the way to do it, or the way that I want to do it, is to size in, and maybe the market needs to break out of this consolidation to do it more so on the S&P. But I'll trade crude oil rarely, only when there's like setups like this, which it's not very common in my opinion. Generally, it's a lot choppier. But if the S&P gives me setups like that, I would much rather like to have had more contracts and then to have more of a scaling out process along the way down, and then I'll leave myself some contracts in case, that I would stop out at break even, in case this thing does trend. You know what I mean? That's like the biggest thing, is capturing that big move. And right now we haven't been in an environment for me to feel comfortable trying to hold for more, because we're not getting more. We're getting chop. Every time we have a breakout to the upside, it goes, oh shoot, we're going back down. Every time we break down the downside, dip buyers come in. It's just kind of how it's been. So it's kind of like the market probably needs to, look at SPY. Go to SPY's daily chart. It probably needs, I'll go to the weekly chart. It needs to break out of this range. So SPY's got to either get above, 412 plus, get up into here, or, start to break down and give us some nice moves, nice legs, nice big, red candles on the weeklies to the downside. And ideally, if it breaks down below these higher lows, then we can start accelerating. Then we can get some really nice breakdown patterns, and then those plays will be there. And then playing those bigger picture moves, or those, holding for more, is more reasonable. Right now, we're just not in an environment to be holding for more. We have chop. We have very, very minimal range price. We have ranging price action. We have decent range. We just don't have huge continuation right on that range, which is the problem when you're playing that type of style. So I don't know. That's just kind of how I see it, and that's what I did. And then also, I think I had like Nvidia or something like that. Yeah, I had Nvidia today on the options side of things. That ended up working decently. Let's see. Yeah, here's where the Nvidia was. I was looking at this setup right here. These lows all coming into the same spot, and then market was weak at that point. SPY was breaking down. We were not at lows, but we were pressuring towards the low of the day. And so on this candle break, that's where I entered. And then we retested perfectly. I was like red by like a few cents literally per contract. And then it just went right down my way. And so I ended up taking it off into this move down. Not the whole way, not the bottom, but into that move down. I took it off. And that was it. So then I left. And that's when I went to go get drone shots. So what time is that? Like 2:15? Yeah, I had other stuff to do today, but I had other tax stuff that was going on yesterday. A fucking mess on that front, but hopefully we're gonna be okay. Hopefully the IRS doesn't come knocking. Dogs are good for your health. Yeah, you know, that's one thing that I feel like we're missing here. We used to have George, which we still will watch him from time to time, our foster dog. We've been trying to look at some breeders and stuff. It hasn't really worked out time-wise and also breeder-wise recently. But we're looking to get a golden retriever at some point soon. At least my girlfriend is. Technically, it'll be like our dog, but I will get my own technically one day. That'll be like paid for / like fully. I'll be fully responsible for financially. Just in case, you never know. In case things go awry and we had to make sure like, hey, you know, in case like we break up, let's make sure that this dog isn't like ours. It's like technically yours, and we're good with that, right? But yeah, I would love to get a golden retriever. That's what I want to do. There's that guy. I don't know if you guys see on like Instagram or TikTok. I forget his name. Oh, I don't know. I forget the guy's name, but the dog's name is Nala. They seem to have a great time, just going on all different adventures and stuff. That seems like a lot of fun. That's like what I want. So what I always wanted in a dog. The only problem is that then, it's responsibility. And then, if it's like a family dog, that's one thing. I had family dogs. We had golden doodles growing up. Mom didn't want some dogs that shed. I want a golden retriever. We all wanted golden retrievers, but she didn't want the shedding. So the golden doodle was the way. We had Cody and Bailey. Bailey is still kicking it, and she's getting up there though. Cody passed away a couple years ago. But he lived like 11, 12 years. So it's not terrible. But yeah, dogs, man. Dogs are the way. Might sound dumb, but I'm not sure how headline inflation can go down, but core goes up. Okay, well, because core is all items less food and energy. And because energy numbers were so low, like food numbers were like, those are starting to, slow down, right? We have a food coming in at 0 and then a negative 0.3. And then on energy, essentially all these numbers were negative, So, actually, sorry. I said food away from home was 0.6 or was negative 0.3. I misread that. Food away from home was actually up 0.6%, but food at home was down 0.3%. But yeah, energy was very, very weak. So in the all items, a lot of that is potentially factoring in energy and food. And then the core is all items minus food and energy. So it's everything else, and that stayed strong because the weaker categories were energy and food. So that's why. That is why. Haven't heard back from H&R again. Having troubles. I'm telling you, this is a time though, like where it sucks because if you have a problem, I got a letter in the mail from the IRS saying that I essentially did something wrong. I filed a form that didn't need to be filed, and I was like, wait, what? So all kind of under control. I know I went back. The way that I'm kind of like pissed myself off is I went back and I'm like, this is so complicated. I do it all myself, which is honestly dumb, but I was like, no, like I can do it. I've been doing it the past couple of years, so I can do it. And a couple of years ago, I submitted some forms to the IRS that apparently never got there. They never got them. I didn't know they didn't get them. I assumed that they got them. I don't know. There's no like online IRS portal for my name and my account. Like, hey, these are the forms No, like this is the most like inefficient fucking thing in the world, the IRS, okay? Like, can you just make like an online account where I can go in and, hey, like upload my documents, like, okay, you owe us this much. Great. Like, I'll fucking pay you, like that's it. Like, it's 2023. How freaking hard could it be? But here we are. But yeah, I had some problems there too. I went back and did the math. I'm like, I actually paid more than I think I should have paid. And that's why getting a professional to look at your shit is probably pretty important. I've done the services and whatever, like the what's it called, Tax Act, or the one that everyone, TurboTax. Like, I've talked to them over the past couple of years. Like, when I'm doing things, I have certain questions. So like, yeah. I look it up online. I'm getting different answers. I'm like, okay, I know you're technically a tax professional, but all these answers online are completely opposite to what you're telling me. So it's just, you gotta find someone that you trust, that you know, and that can kind of deal with your stuff and knows you and knows your circumstance, and then work with them. And that's it. Ideally. Small fish in a large pond. That's kind of how I view it too. I'm like, there's people that are probably doing much worse, and that there's more reasons to audit them than me. Although I'm like, if the IRS audited me right now, I'm pretty sure, pretty freaking sure that I actually paid you more money than I was supposed to pay you. And so I will be happy to get audited. And I say that now as like, I'm not even kidding. Although I'm probably going to regret saying that. 1099s, 1040, I'll do it myself. Yeah. When you start adding all these forms, man, it complicates things. Double tap on the daily for SPY. Let's look at SPY. Let's look through a bunch of things. Okay, so SPY, double tap on the daily. Let's see. Yeah. So let me get rid of these lines and reset our lines. I draw these in like every day. Yeah, pretty much. I mean, it just barely broke that. Yeah, I can call that a double top, I would say. So the spots now are pretty clear to me. It's like, okay, either you're going to break this or not. Now, tomorrow wouldn't surprise me in the least to just do this. Put in a stick to the upside. Now put us right here. It's like, okay, well, that's great. But the thing is, tomorrow is Thursday, so we're going to get job numbers. We're also going to get PPI numbers. So we got some good stuff coming tomorrow. Yeah, jobless claims. So that should be good. And I don't see any Fed speakers. So after 8:30 a.m. tomorrow morning, we're going to hopefully have a fairly chill price action day where we're not going to have news that's going to drive us, right? Then on Friday, there's some more stuff on Friday. It's could be a mess. Friday, who knows what's going to happen there? I mean, consumer sentiment, all this stuff. I have to get a freaking crown on Friday for my back molar. Of course. So it's like 7 a.m. So I'll be good. I mean, I'll be home before or probably around this time, but I have no interest, especially until 10 a.m. Eastern time. So that's like a half hour into the market opens. That's after business inventories and sentiment. Then I would maybe take a look and say, okay, it's valid to look at the trends here that we're seeing. But until then, I'm not interested. That's kind of how I'm going to view it on Friday. But tomorrow should be good. Tomorrow could be a nice day, depending upon how the morning goes and data-wise. If it's good, if it's bad, who cares? Whatever the market wants to do, market wants to do. If the market breaks down under here, I like shorts. I like a lot of shorts across, just for day trades, across individual names that have the best setups and patterns that you like and stuff. That's what I'd be looking for. But if it doesn't, I just don't feel comfortable really going heavy short just yet, especially, until we break that level. Because it's like, okay, we're just in this freaking range now the past 2 weeks. So another time where you could potentially be getting screwed on, premiums if you're playing like a straddle or strangle strategy. Because if we just do this, then what? It's like, okay, we didn't move. If you're playing a straddle or strangle, you want to see this or you want to see this, like going into next week, like Friday, kind of making that push, right? Breaking out by Friday at least. If we don't get it, it's like, oh God, here we go again. Here we go again with this freaking range. But it is what it is. I was viewing it and saying to myself too, I was like, hey, I've gotten a lot better at handling the chop. And so I'm like, hey, if I can just, handle this and then we start breaking out of a range, that's where maybe we can start holding a little bit longer on trend breaks or on trending days and on pattern breaks and whatnot. And then those days ideally could be what makes, a a good chunk of change when we start, moving nicely instead of this choppiness. But inside the chop, there's still opportunities, right? So don't get me wrong. We have CRA in Canada, and you have individual online account where you can see all your documents and returns. That sounds awesome. Like, I just would love to do that. I would love to do that. Jeez. The case is simple. Yeah, and then I had a situation like 2 years ago I was going to do my taxes. I was talking to someone about it, I think on like TurboTax or whatever. Like I paid for like the whatever subscription. This is like 2 or 3 years ago. And this is like when I kind of got into like, this must have been 2019 taxes, like that I was doing in 2020. And I remember going through and they're like, okay, like upload your documents from, your brokerage statements. I'm like, okay, and then it wasn't working. And then it's like, okay, can you just import or input the individual trades? I'm like, you want me to input the individual trades? They're like, yeah, why? I'm like, that's a lot. And they're like, how many? A couple? I'm like, no. This is like hundreds. Because this was like when I was small caps buying, 100 shares here, 1,000 shares here. And like all 2019 was what I was doing, like essentially. So they're like, oh. And then I guess there's the summary at the top that you enter those numbers. But I'm like, geez, like that's not possible. Like it shouldn't be this difficult. Like I'm sure they can track, and they are tracking a lot more than we even know. So why are we even bothering with this stuff? Like just, how much I made. Like you have my bank accounts. Like if you want to get in and just monitor them, I'm sure you can look at them. Just tell me what I owe. It's as a joke. Like that's kind of how I feel about it. Just tell me what I owe you, if I owe you anything. But yeah, a lot of people are in the same boat when it comes to that. And it is mentally draining sometimes too, which is also why people pay for someone to do it, because it's like, hey, I don't want to fucking deal with this stuff. Please take this off my plate and do it for me. Like, yeah, I get it. I get that 100%. Okay. Yeah. So now, yeah, what I wanted to do was check out this, because we're going to see there's still 3 weeks technically until this. This didn't actually shift a ton. It actually kind of went a little bit back. Current probabilities is that the Fed is going to do one more hike. 70% chance. 30% chance that we're going to get nothing at the next Fed meeting. So we're going to probably get a hike, which is going to be interesting to watch and see if that pans out. But that's coming on May 3rd is the date for the potential next hike. I would imagine if we get a hike there, it's probably done. Probably done. Say probably, but who knows? I haven't looked at the bond market yet. Let's see. I'm looking at the VIX too. I want to look at all this stuff. Okay. The 10-year. I was about to say DXY. The 10-year did dump, and then it bounced back a bit. So honestly, kind of muted reaction on the 10-year. Didn't really do too much today off of that move. DXY did. DXY looks like she is ready to break down for the next leg. DXY under 101.45, which we're like right there right now pretty much. Probably sends us down to test lows of the year around $100.80 on DXY. And then if we break below that, I wouldn't be surprised if DXY goes sub 100 pretty fast. And then we'll see if it has to consolidate or breathe after that, right? But that's kind of the looks. It looks weak. Every pop is getting sold off on DXY. And so pressure on DXY. And that's probably why you saw today silver and gold rip. So silver finished up like, I don't know, 1% or 2%, almost 2%, had this break here. Essentially kind of had a bull flag on silver on the daily forming, like right there. It broke that today, popped up, and now it's sitting here at 25.50, which it looks good. Gold is at 20,016, not at highs of the year yet. It's close, but it spiked to highs of the year a couple of days ago. But it's right there, building higher lows. It does look pretty good. We are very, very close to an all-time high test. That blue line up there, it would be and is an all-time high test on gold if we get it. So that's what we're looking at next on gold. I did buy this a couple of days ago, maybe on Tuesday or Monday, was AI. I bought AI puts, and I was like, hey, I'll hedge myself this week with AI puts in the Robinhood in case we see down. Like if the market gets hit pretty hard, my suspicion is that AI been put in a lower high here yesterday and sold off pretty nice. My suspicion is this is going to break down under 20 and go to 18 at some point in the coming weeks. If the market's weak. If the market's strong and super strong, then I could see this thing holding here and bouncing, right? Whatever. But if the market was strong and this thing broke down, that's not a good sign. It's pretty bad, actually. But who knows? I just said, hey, I don't really have much short exposure outside of holding oil stocks, which oil is actually ripping up. So I'm like, okay, the short exposure here is not really cutting it right now in case the market does dump. Let me get something else. And so that's what I bought for about a month or two out, just to give myself a little bit more short exposure in that portfolio to hedge. But that's it. I don't like to do that when it comes to hedging like that. I would prefer the 3X ETFs, but I just figured AI was a stock that a lot of people may be on the wrong side of the trade, or really over aggressive to the long side. What's the way to hurt a lot of people is have AI stocks drop, because it's like one of the sectors everyone's just, jerking off right now, and for a good reason. Don't get me wrong, but that's a sector that I could see a lot of pain, especially if we start to break down. So we'll see. That's why I'm hedging myself a little bit into that. But if I would look at oil stocks, let's look at XLE. How did that do today? Because I'm curious. Yeah, XLE, it tried to break out, and it looked good for a minute, and then it just couldn't break above or confirm above the highs that we saw back on like April 3rd. So this is something to watch too. If oil can't break out, this could be a breakdown opportunity on XLE. This is the daily chart, which would mean it has to break down below like $86. If it falls under $86, that could be a really nice trigger for like an attempted breakout, rejection, and then fall back down, fill the gap. That could be a nice swing idea. I mean, of course, right now is a decent risk reward, but if that breaks down, I like that idea a lot. So we'll see. Keep an eye on that, because people are jumping on the long side of oil again, and just be careful, right? You always want to be early. So if you were buying oil when oil was going down to 70 or when XLE was going into this, let's say you're buying XLE when it was in the 70s, hey, you're up freaking $10, dude, in like a month. Not even. You're up for 15%. Great. On that trade. Big move, right? Can we get continuation? We totally could get continuation. But kind of the same deal as this, right? On the way down, right here, we had this big gap that came back, filled it, and then fell. So if we are going to go up, I'm thinking, hey, a healthy move to go higher, right, would be come back, fill that gap, hold that, and then push back up, and then round the corner and move. That would be a healthy move to the upside. And so if we don't do that, if we kind of just start this gap and go, I don't know, I'm a little more skeptical of that move, in my opinion, for like the health of that longevity move. So we'll see. We look at oil stocks more specifically. ExxonMobil is in just consolidation mode still. Trying to get up there, but fell back off. MRO, pretty nice red candle there on MRO. And then Oxy green today. Oxy was green today. I guess Buffett was buying. Buffett was buying it up. Kyle's peacing out. Good luck. Enjoy the chicken salad, my friend. Nice to catch you live. Happy evening. Homer's Reluctant Odyssey is in the house. XLE idea looks good. I love those kind of setups. Wait for price to break its trend. Yeah, I mean, those tend to work pretty good. Those tend to be pretty good, I think. What it is really is kind of like, and you can almost look at SPY today as kind of a situation that's similar, right? I'm going to 5-minute on SPY and see. Right, where you kind of had this, let's see if I can draw. Well, I don't know, you kind of had this level right here. Let's call it this, right? That was your support, right? You had held that, 1, 2, came down there 3 times. Then you came up, you found resistance right here. You failed to break it, and then you broke down hard, and then that support broke. So that's kind of the idea on like XLE. If XLE, can't go over like, what is that, 87.50 or so, which is like that breakout zone. If it can't get there and it fails that, and we start seeing pressure to the downside, then this support breaks, higher lows break, it could give us a nice move down. So keep an eye on it. Looking back, maybe I could have added a little bit to some of those oil hedges, today or, or the past couple weeks, past couple days, I guess. I decided not to, just going to leave them as is and let them do their thing. So we'll see. Any small caps? You know, I was going to look through the list that I had. I'm going to pull it up quick and see what's on the list and just run through some of these guys because it's worthwhile, but I don't really feel the pulse right now in small cap land. NVOS's chart still gets me interested, right? Yet again, I'm out of it now, but it's still a very valid looking chart in my opinion for one of those small cap swing ideas. I think it could be good. AYRO, some volume, but not much. ACHL, a lot of these charts, man, not bad because if you look at like AYRO too, right? What do you see? You know, you've got higher lows trying to build, so it's not a bad look, right? On these looks, ACHL, kind of same thing. You had a higher low here, not a bad look. WISA, the destruction continues. Again, this is going to be another one of those that could provide opportunities if you are not super scared to buy the dips here. But again, I just don't know. I want to go and pull up. Let's see. I'm just ripping through some of these really quick just to see what the heck what I like. If I like anything, Grom could be interesting. Although same kind of setup here, right, on Grom. Right, and this thing breaks down. If it does break down, not a good look. But let's see, if I zoom in, is there any decent volume? Not really. Volume is pretty light, you know? So, I don't know. You kind of saw it here on this big move down. Look at some of these volume spikes. 1, 2, 3, 4. These all kind of spiked it, and then it held higher lows before the big pump. You're not really seeing that right now. Like, yeah, one little one here, but nothing like super noticeable. So, I don't know. Could easily break down that support and go for more downside. CFRX, my goodness. Annihilations. This is just insane. I would love, listen, oh, look at that. SECO. That one pumped and did nice. I would like to see, the thing is, there's so many potential charts. Like, I'm just ripping through these, and like, I see a lot of potential opportunities. Look at this. IMRX is a beautiful balance off that trend line, off that support. Hindsight. Jeez. IPSC, look at that destruction. JAGX is in the 50s. Remember when we were looking at that thing when it was like $1? Now it was gotten destroyed. Could now be a very potential, decent idea down here, right? What do we got? Like just absolute destruction in the past, 2 months. It's down 82%. I'm not saying it has to bounce, but geez, the thing could bounce. Like we always talk about sometimes, it could bounce, 500%. And then still be right on its way, to go back down and make a new low. And that would not be like unrealistic in my opinion. As crazy as that sounds. But pump and dump, small cap land. It hasn't been hot though, man. That's the only thing. So if I go pull up Webull really quick and see what the top gainers were the past like couple days. Top gainers today. Let's look at these charts. Okay. NCMI was a cheapie, right? It was like a 10-cent stock. Some volume pumps there, so that was interesting. IDAI was off of essentially lows. That pump. GFAI. Okay. Yeah, I mean the best trades, man, again, same thing, are these low risk, high reward setups, bottom plays. This is what I'm seeing right now. NCMI was nice because if you had kind of didn't see today, right, what the volume would have told you. Look at some of these volume spikes. They were telling. This thing averaged like less than 1 million volume every day, and all of a sudden it starts ripping 12 million, 16 million, 22 million shares. Like that's telling me, hey, what the hell is going on here, right? But that's it. The only small cap I am swinging right now is UONE. Which I am swinging into Juneteenth. It's just been a slow grinder. I don't have a lot of money in it, and I took my first small profits at $8 because I got in around 7. And it's doing its job. It's just kind of slowly working, but I mean, I'm not willing to put in a ton of money into this. I'm also not really super excited about it. It's up a lot. I could easily see it break back down. If it does, I won't, we'll have to get out. So that's kind of the deal. It's like I'm not super excited. Nothing gets me really going, which maybe that's a good sign because it's time to start thinking about these a little more. But I don't know. The thing that would be really good is if the market does kind of eventually whatever next leg we get, up or down. Hopefully, this sets up some really nice squeeze opportunities in small cap land, whether that's because now all of a sudden everything's going, down so much and small caps start kind of getting some attention again, or if we go on to risk, if we get in a little risk on mode, maybe that can kind of help. That's the only thing. Volume on REVB. Let's see. Yeah, it does. New lows just hit. So we had a level there to watch. New lows hit, but into those new lows, lots of volume. Add to the small cap list. RevB. Interesting. That could be one to add to the list there. Look into what their cash. They're currently at a 4.69 million market cap. Pretty tiny. PSNY. Polestar, baby. Polestar, to be honest, right? This is not the best looking setup because you have this. Here's the spot that I would say you need to break it back above. So you're consolidating underneath a prior support, which tells me this is going to be a resistance. So if you get above, $4 and you can start building above 4, that's a really good sign on Polestar. But if you can't, it's not great. The good thing about it right now is that it technically has now established a higher low. Cool. If that higher low breaks down, then, I can easily see this next leg down if the market is super, super weak. If it's super, super weak. But yeah, the key spot is 4, get above 4 again, and then we can start talking about, it really kind of coming back. But if it can't, that 4 is resistance right now. So that's the key spot. IWM heats up. JAGX decline. Now that JAGX decline is nuts. I mean, that's the thing that's crazy about these charts. I mean, look at this stuff. Now, this is a piece of shit company, and don't get me wrong, it's not a good company. These are all horrible. Most of these are horrible companies. These small caps to look at. Most, 99% are probably horrible, and will never amount to anything. Like literally, it's just the harsh reality. But whoever maybe snagged a piece of this move could have made a lot of money. Right. And if you snag, let's say another bounce, you can make a lot of money, right, on those. And so it's about timing that. It's not, you're never going to be perfect, but it's about kind of timing those bounces. And we generally look for volume to come in. And maybe there's a little bit of volume yesterday on JAGX and it's now holding a low. So you look for those little signals, little signs. It's trying to hold this low right now in the 50s. 50 cents happens to be kind of a psychological area of support in small caps as they start coming down that level or pushing up. So it's not a bad idea to maybe start saying, hey, if this can hold, I'll take the risk. I'll take this, for whatever the risk reward is going to be. I would imagine that it's going to be a pretty tight stop. Let's see. Yeah. 2-to-1 would be, that's nothing. Hence why I think that the 5, those if you caught bottom here, look at the bottom, from bottom to where it went. Pretty big move, man. That's why the risk reward profile is nuts. I think when you look at a lot of these small caps, but the only problem is it's not as easy to kind of nail them, and it comes down a lot to the market. If the market's not hot, these things could bleed, whether they're 5 million market cap, 1 million market cap, a best company in the world because of this pipeline or not. That's who cares. Market will just take them down. Slowly but surely just take them down. So that's the only problem. Yeah, let's look at IWM. When that heats up. Let's see. Yeah, no signs yet. It's just still in consolidation, shit show mode. Well, look at this. Look at IWM on the weekly chart. What the hell is this? You have now just a general consolidation that's been pretty nasty. And then you are consolidating on a smaller scale inside of the bigger consolidation over the past year. Talk about a shitty chart, shitty price action in terms of trends, right? You're not getting much. And that's what we talked about a couple of times. What if, right? What if this just is the reality for a couple of years? And we don't crash and we don't rally and we just kind of fuck around for, a while. It would be painful. And that's why I think a portfolio, that's why first off, The skill of trading is cool because it doesn't matter what happens. Ideally, there's certain environments where maybe this is better than that, but you can always adapt to that. And then the idea of just funneling money into a dividend portfolio also is pretty appealing as well, right? Because at least you're getting paid dividends and you're slowly building a bigger position, even though maybe your account's kind of stagnant for a while. You're slowly accumulating more shares that the next time we do go up and rally in years, maybe, who knows, next couple of years, whenever that is, next bull market, you'll be in a nice position in terms of having a larger, piece of the pie. I'm watching GOEV come back to 50-ish. Remember that stock? That's a funny one. Canoe. Talk about just like an absolute... That's... Oh my gosh. That sucks, man. But what do you got on Canoe lately? Something to note. This is the weekly chart. What is this? Pretty decent volume, but prices have kind of been stagnant, and even now are starting to consolidate a bit. All right. Here's the daily chart. Decent little day today. Something may be kind of lurking there for Canoe. Volume is there. Price action's not, but volume is perking up. Someone could be looking to load it. Wow, I think IWM's been there at the same level since 2018. Yeah, it's actually nuts on IWM. I mean, it's had some good moves, don't get me wrong, inside this span. But yeah, I mean, it's obviously had its ups and downs. I had the pandemic and then it had the spike above. But you pretty much reverted back to the mean here, like of the past couple of years. You've reverted back to the mean pretty nicely, right? Compared to the spike down and the spike up. So we are just trading right in the middle of that. So that's where and if you were invested in IWM, again, just like the S&P, if you like small caps and you're like, hey, there's opportunity here or whatever, and you don't want to sell and you want to hold this long term, like, well, let's look at where you're at, right? Technically speaking, let's say you started buying in August of 2018 and you've got essentially bought the top. Well, you technically would be up about 3-4%, or let's say 2% on it. However, if you slowly accumulated more and you bought into some of these dips and you dollar cost averaged and you were buying, little by little around this entire, past bit, there's a good chance that, number one, your average could be lower. Let's say your average is the same. Fair enough. You're going to have a lot more and you're going to have maybe collected some nice dividends. So you should have made money. You would be up on that position. So, it's just obviously we are skewed by some of the returns that you can see on a day-to-day basis or a week-to-week basis or a month-to-month basis that, in this day and age, especially in social media, that 2%, 5%, 10% is not good enough. It's never good enough, right? So that's just where we're at. Okay, with that said, the biggest thing to watch as I wrap things up for this evening will be, I think the metals are key to watch. DXY, check it out. Check out DXY here. Doesn't look too good. This is going to break down, looks like. DXY breaks down, metals rip. And in theory, some will say the stock market should also be strong and it should support the stock market to some degree. We'll see how much that plays out into this year. It's kind of been that case where, ever since DXY has been trending down, the market's been trending up, and we'll see if we get the next breakdown. Does that help support the market or not? If it breaks this, that's the question. So I think it's looking good for silver, looking good for gold right now. Bitcoin, let's mention that quickly, broke out. It doesn't look too bad. So we'll see if that can hold the breakout up towards 30K. Now 30K will be a key psychological area. I'm kind of saying to myself, Bitcoin get above 33, 34, and then we can start saying, okay, it's proven itself. Not that I'm, going to buy it up there or versus here. No, but if it can start to break up into the mid 30s and hold, then it's proven itself. And I think it's a lot stronger. I think it will start catching a lot more attention, although it always kind of has, but I think it will catch a little more attention, in my opinion. So with that said, I appreciate you guys for hanging out on this fine Wednesday evening. SPY, last thing to mention, S&P, we're in a range right now. You got to break over 412 or you got to break below 405.70. If you do that, there are some little gaps to fill on this chart to the downside that we can be looking at as targets down into the upper 390s. You know, a nice maybe $10 move down on SPY over the next week or two could be in the cards. Also, note something today too. It was a CPI day, so we get higher volume. Sell-off day with high volume or higher volume than we've been seeing. So that's something to watch. Thanks so much for hanging out, guys. I appreciate you. Have a great night, great rest of your week if you don't see us. And I'll be back on a stream Friday afternoon. Stay tuned, and I'll see you guys then. Peace out. Enjoy.